Pranay, this is perhaps the most bullish estimate of GDP. I think, in fact, even it's more than the consensus estimate of 7.5%. If you look at it, right now we are looking at 6.2, and if you're going to go to 8%, that's a huge jump. Now, it looks huge, but if you put all the other positive factors into play, looks achievable. May not necessarily be 8%, it could even be 7.5%, give or take about 50 basis points depending on your oil prices and how inflation pans out. Inflation obviously will have to go up if you are looking at that kind of a growth rate. But what's more important today in the current market scenario, remember, on November 30, the GDP numbers are going to come. That we watched very keenly by the markets. Today the market is slowly moving from funds to fundamentals. Both fundamentals of the economy as well as fundamentals of the companies. The important issue here is this is coming at a time, see, we can't dismiss this brokerage house report as just another report of estimate, but we will see more such estimates from other brokerage houses. This is coming on top of Moody's upgrading India by 1 notch, and Moody's upgrade is based on several assumptions that will pan out in the next 2 years. Therefore, 8% looks interesting, it's possible, but there might be risks to it, as you know.
But and also interestingly, because it comes at a time where many skeptics would say that it's a backward-looking monitorable, and as we speak, these risks have only escalated, if anything.
Yeah, the risks have escalated, but then some of the risks can be offset. Oil, for instance, Goldman Sachs itself says that if oil prices increase by 10%, oil is an unknown as of now. If it's on the rise, but it's not really running away.
Right.
Okay. What Goldman Sachs says is 10% increase in oil prices will lead to a dent of about 20 basis points. But you follow oil, the energy sector very closely. Shale gas could put a cap to it, isn't it?
Yeah. Absolutely, and I mean, even in case of the worst sort of short covering, even if we have seen it on the higher side, on the higher call contracts, it's not still gone beyond that $64 handle. And I think, Murli, the most important trigger will be the extension of that oil agreement. If at all we hear something, it's an interesting time again because it's only 8 days from now, the OPEC meet, and then further triggers if we could get something beyond March in terms of an agreement from the oil and energy side of things. And of course, as Murli was also pointing out, the US production number is constantly going higher, and the supply from US is also compensating and taking up a lot of whatever is being evacuated by Saudi Arabia at this point.
Yeah, but there are a number of other factors we need to watch, which I think the positives will outweigh. In the next 6 months it may not, but in the next 1.5 years they will start playing out. The GST rate cut, GST will settle down, the negatives will diminish, demonetization will get fully absorbed into the economy, and the revival of the growth to a great extent will also depend on, see, today inflation is still under control, okay, but inflation will definitely go up. What will happen is the RBI may not really, the rate cut, you have to forget rate cut now. Let's be very clear about that. The RBI will pause. It may not go accommodative, at least it will be neutral. It sucked out all the excess liquidity in the system to a great extent with the latest round of auctions. So when that's sucked out, we are going to look at a longer pause, but in the next 2 years, whether the RBI will turn dovish or hawkish depends on a number of factors apart from oil. The salary increases are there. There's one more round which has to come from the state governments. So when that happens, when the arrears are paid, it will have some effect. So whether the RBI will look at setting a headline inflation target and saying that on a sustainable basis we want to control inflation, then it may sound a little hawkish. But if it says that, okay, let's give it some more time and let's look at a sustainable kind of inflation rate, let's say 4.5, they'll have to look at that target as we move along, because with 8% growth we need to. But the more important point is, assuming Goldman Sachs call comes true. See, you should also remember Arvind Subramanian in an interview said that he is looking at a potential of 8.5%. So all these things are falling in place. But for the markets, it will be a huge jump. So the markets will slowly start recognizing this factor, start watching the macro, start watching how credit offtake picks up. Do remember, if you have to achieve 7.5 or 8%, your credit growth has to grow by 18 to 20% on an average every year. That may not happen immediately, but with the cleanup happening, there are supply side constraints. With the cleanup happening and the recap happening, the bank's ability to lend more will be there. Now, there is a view that there is a supply side limitation for credit growth not taking off. Now, your Nifty is today at what, 10,000, 10,500 it will reach if the same trend continues. Will it go up by 30% because of a 8% growth is an estimate which all the houses will start working on now.
Absolutely, and corporate earnings going ahead also will be a big trigger because we've seen that happen in the US as well, right? With earnings estimates improving. The kind of inflows also become a function of that incrementally. Abhishek Upadhyay, senior economist at ISEC PD, joins us now. Abhishek, thank you for joining in. First up, your estimate for 30th November.
Yeah, so we are at 6.1% for real GVA growth and 6.3% for GDP. Now, of course, this marks an acceleration from 5.6% growth that we saw over the last couple of quarters. That is mainly reflecting GST-linked issues settling a little bit. In the first quarter, you saw there was a big inventory destocking that really affected industrial production numbers that printed at near record lows of 1.5%. So you should expect some recovery there. The reason we don't anticipate a bigger revival, though, is that segments of services could possibly have weakened over this quarter. Government spending in particular was weaker as fiscal deficit, which was running much higher compared to norms for the year, were basically tried to be tackled. And agriculture is another area which could basically point to some weakness. We had the first advance estimates from the Agriculture Ministry, which indicates that Kharif production basically contracted about 2.8%. So that would basically lead to some softening in the agriculture growth numbers.